Hello viewers, welcome back to my YouTube channel. So we are on the website of bankcred.com. On this website of bankcred.com, we have a blog for stock market basics. Let's see if you are a beginner and you need tips for stock market investing, then we are here for you. There are 9 tips for beginners on this blog for, you know, investing in stock market. This is also the most recent one. News shows, Hollywood films, and TV all assume that you know what the stock market is and how it works. Everyone knows that you can make a lot of money in the stock market if you know what you are doing. But beginners don't often understand how the stock market works and exactly why stock go up and down. Here is what you need to know about the stock market before you start investing. Key takeaways: the stock market consists of stocks that can be bought and sold by the general public on a variety of different exchanges. Making the right investment is the key aspect of investing, but continuing to hold a well diversified portfolio can help increase your returns over time. Investing is about building wealth over the long term, so it's important to avoid a short term trading mentality and to continue to invest over time. What is the stock market? Stocks, which are also called equities, are securities that give shareholders an ownership interest in a public company. It's a real stake in the business, and if you own all the shares of the business, you control how the business operates. The stock market refers to the collection of stocks that can be bought and sold by the general public on the variety of different exchanges. Where does stock come from? Public companies issue stocks so that they can fund their businesses. Investors who think the business will prosper in the future by those stock issues, the shareholders get any dividends plus any appreciation in the price of the shares. They can also watch their investments shrink or disappear entirely if the company runs out of money. Features investing products of, okay, not reading. The stock market is really a kind of aftermarket where people who own shares in the company can sell them to investors who want to buy them. This trading takes place on a stock exchange as such as the New York Stock Exchange or the Nasdaq. In years past, traders used to go to a physical location, the exchanges floor to trade, but now virtually all trading takes place electronically. When news people say the market was up today, typically they are referring to the performance of the Standard and Poor's 500 or the Dow Jones Industrial Average. The S&P 500 is made up of around 500 large public traded companies in the US, while the Dow includes 30 large companies. These track the performance of collections of stocks and show how they fared on that day of trading and over time. However, even even though people are referring to the Dow and the S&P 500 as the market, those are really indexes of stocks. These indexes represent some of the largest companies in the US, but they are not the total market, which includes thousands of publicly traded companies. Of course, you will need a brokerage account before you start investing in stocks. As you are getting started, here are 8 more guidelines for investing in the stock market. Okay, how to invest in the stock markets? 9 tips for beginners. Buy the right investment. Avoid individual stocks if you are beginner. Create diversified portfolio. Be prepared for downturn. Try a simulator before investing real money. Stay committed to your long-term portfolio. Start now. Avoid short-term trading. Keep investing over time. Number one, buy the right investment. Buying the right stock is so much easier said than done. Anyone can see a stock that's performed well in the past, but anticipating the performance of a stock in the future is much more difficult. If you want to succeed by investing in individual stocks, you have to be prepared to do a lot of work to analyze the company and manage the investment. Let's go down. Number two, avoid individual stock if you are a beginner. Everyone has heard someone talk about a big stock or win or a great stock pick. What they forget about is that often they are not talking about those particular investment. They also own it very poorly over time. Chidi says. So sometimes people have an unrealistic expectations about the kind of returns that they can make in the stock market, and sometimes they confuse luck with skills. You can get lucky sometimes picking an individual stock. It's hard to be lucky over time, so avoid those big downturns also. Number three, create a diversified portfolio. One of the key advantages of an index fund is that you immediately have a range of stocks in the fund. For example, if you own a broadly diversified fund based on S&P 500, you will own stocks in hundreds of companies across many different industries, but you also could also buy a narrowly diversified fund focused on one or two industries. Number four, be prepared for a downturn. The hardest issue for most investors is stomaching a loss in their investment. And because the stock market can fluctuate, you will have losses occur from time to time. You will have to steel yourself to handle these losses, or you will be apt to buy high and sell low during a panic. So, guys, this is all on the website. See you soon in the next video. Till then, subscribe my channel, press the bell icon for more updates. Bye bye. Take care.